Saudi Arabia's oil behemoth, Aramco, is a paradox. It is the world's most profitable company, yet it faces economic headwinds that threaten its dominance. It is the main source of revenue for the Saudi state, yet it is also the vehicle for its ambitious diversification plans. It is a symbol of national pride, yet it is also a target of international scrutiny and criticism. Aramco's latest earnings report, released on Sunday, highlighted these contradictions. The company reported a 25% drop in net income to $121.3 billion in 2023, down from $161.1 billion in 2022, due to lower oil prices and demand, as well as weaker refining and chemicals margins. Yet it also increased its dividend payout to a whopping $31 billion for the fourth quarter, up from $28.8 billion in the previous quarter, rewarding its shareholders, especially the Saudi government, which owns 84% of the company. The dividend boost came after the government transferred an additional 8% stake in Aramco, worth $164 billion, to its sovereign wealth fund, the Public Investment Fund, PIF, in December. The PIF, led by Yasser Al-Rumayyan, who is also the chairman of Aramco's board, is the main engine of Saudi Arabia's Vision 2030, a sweeping reform agenda that aims to reduce the kingdom's dependence on oil and create a more modern and diversified economy. The PIF stake in Aramco, now at 16%, is expected to generate more than $140 billion in dividends over the next 5 years, according to Aramco's CFO Ziad Al-Morshed. This will provide the PIF with ample resources to invest in sectors such as tourism, entertainment, technology, and renewable energy, both at home and abroad. The PIF's assets under management are projected to reach $1 trillion by 2025, making it one of the world's largest sovereign wealth funds. But the Aramco PIF nexus also raises questions about the company's governance, transparency, and sustainability. Aramco, which listed 1.5% of its shares on the Riyadh Stock Exchange in 2019, is still largely controlled by the government, which sets its production levels, taxes, and dividends. The company's board, which includes 5 independent directors, has limited oversight over its strategic decisions, such as the share transfer to the PIF, which was announced without prior consultation with the board or the market. Aramco's dividend policy, which guarantees a minimum payout of $75 billion per year until 2024, is also seen as unsustainable by some analysts, who argue that it leaves the company with little room to invest in its core business or in new opportunities. Aramco's capital expenditure, which fell to $35 billion in 2023, down from $40 billion in 2022, is expected to remain flat until 2028, according to the company's guidance. Aramco also shelved its plans to increase its oil production capacity from 12 million barrels per day to 13 million barrels per day, citing the government's directive to maintain its current level. Aramco CEO Amin Nasser defended the company's dividend policy and capital allocation, saying that they reflect the company's confidence in its financial strength and operational excellence. He also said that the company is pursuing growth opportunities in gas and chemicals, as well as in low-carbon technologies, such as hydrogen and carbon capture. He added that the company expects the global oil market to remain healthy and robust, with demand growing by 1.5 million barrels per day in 2024, despite the challenges posed by the COVID-19 pandemic, geopolitical tensions, and climate change. Aramco's optimism, however, may be tested by the realities of the oil market and the energy transition. The company, which produced an average of 12.8 million barrels of oil equivalent per day in 2023, including 10.7 million barrels of crude oil, faces increasing competition from other producers, such as the U.S. shale industry, which has recovered from the price crash of 2020 and is expected to increase its output in the coming years. Aramco also faces pressure from its customers, especially in Asia, which account for more than 70% of its exports, to offer more attractive terms and discounts, as well as to reduce its carbon footprint and emissions. Aramco, which claims to have the lowest carbon intensity of any major oil producer, has pledged to reduce its greenhouse gas emissions and to achieve net zero emissions by 2060. But the company has not disclosed its baseline emissions, its targets, or its roadmap to achieve its goals, raising doubts about its credibility and commitment. Aramco also faces legal and reputational risks from climate litigation and activism, as well as from human rights and governance issues in Saudi Arabia, which could affect its access to capital and markets. Aramco, therefore, is at a crossroads. It is still the world's most profitable company, but it is also the most exposed to the uncertainties and disruptions of the oil market and the energy transition. It is still the backbone of the Saudi economy, but it is also the catalyst for its transformation. It is still the pride of the nation, but it is also the subject of global scrutiny and criticism. How Aramco navigates these paradoxes will determine not only its own future, but also that of Saudi Arabia and the world.